Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. When we are talking about a Roth IRA conversion, let's get this all out on the table here. Let's talk about what this actually means. So basically what I mean is converting money from a traditional account into a Roth account. Okay, so generally what this means is a traditional IRA into a Roth IRA. And basically what you're doing is you're just transferring assets from the traditional IRA to the Roth IRA in this example. When you do this, it's what's known as a Roth IRA conversion. The amount that you convert is going to be generally taxable as income to you because money that comes out of a traditional account is going to be taxable income. So you're actually just basically transferring it from traditional to Roth, and that amount that you transfer is going to be taxable income to you. So that's what I'm going to be referring to when I'm talking about a Roth IRA conversion. Now you might ask yourself, why would you even want to convert money? Why would you want to create taxable income for yourself? Well, there's a very, very good reason. There's several reasons in fact, but I'm going to focus on the most important reason, and that is that money that's in a Roth IRA, it's 100% yours once it's in there. That's because money that comes out of a Roth IRA is 100% tax-free because the money that you contribute to the Roth IRA has already been taxed. So it only gets taxed on one side once it goes in. When it's in the Roth IRA, it grows tax-free and it comes out tax-free in the future. The power in this is in a very, very long time, a small amount of money can become an enormous amount of money. When you pull out that enormous amount of money, you're not going to pay any taxes on it. So that's why we generally do want to have some money into a Roth IRA because it's going to give us that 100% peace of mind that all that money in there is going to be tax-free when it comes out in the future. And we need to illustrate in this video how to do the perfect Roth IRA conversion, okay? Because you don't want to just go throwing in 100% of your traditional IRA money into your Roth IRA money. In most circumstances, you're probably not going to want to do that because you're going to pay a lot of taxes on it because the entire amount is going to be taxable as income. So there is a sweet spot you need to find. But there's also another sweet spot that you need to find, and that is the like button on this video. Okay, if you're enjoying the video so far, please make sure you like it. Just hit that little thumbs up on there, give it a tap. It really does help me out and I really do appreciate that. But now let's get on to making the perfect Roth IRA conversion. In order to do the perfect Roth IRA conversion, there's only 3 simple steps that you need to take, okay? So we try to keep this as simple as possible. The very first one is you're probably gonna wanna wait until Q4 of the year. That is the last 3 months of the year, October, November, and December. And the reason for this is that it's gonna allow you to see how much money you've made throughout the year, and it's gonna allow you to better estimate how much total income you're gonna have for that calendar year that's gonna go on your tax return when you file it. So that's why step 1, you wanna wait until at least the last 3 months of the year in most circumstances before you make your Roth IRA conversion. Step number 2 is to actually estimate your total income for that year. So take how much you made all the way up until that month and then estimate the remaining amount that you're going to receive for the rest of the year so you know what your total income is going to be, or you have, your best guess of what your total income is going to be. You're going to need to know this to get into that sweet spot of the Roth IRA conversion. Because then step number 3, the last and final step, is to actually convert money from your traditional account to your Roth account within this tax bracket sweet spot that we have. And you're going to need to do all those previous steps first before you do this. Now, what those tax sweet spots are going to be the marginal tax rates from the federal government. So let's talk about those Roth IRA conversion sweet spots. So for the 2022 tax year, this is the sweet spots here. For most of us, I think that most of us earning the median income around there and less, the sweet spot is going to be the 12% tax bracket, okay? And that's because once you reach the 12% federal income tax bracket, it's going to jump up from 12% to 22% over a certain amount of income. And most of us probably want to avoid the 22% tax bracket. So that's why the sweet spot is going to be that 12% bracket. Now, if you make a really high income and there's just no way you're going to get down into the 12% tax bracket, well, that's good, right? It's good to have a high income. But also, your sweet spot might be a little bit different. Your sweet spot might actually be the 24% tax bracket because after that, it jumps up 8% to 32%. So you might want to stay out of the 32% and you might want to stay in the 24% if you have a higher income. But I think for most people making around the median income, that sweet spot is going to be the 12% bracket, okay? Because we don't want to jump from 12 to 22%. So in order to best illustrate these sweet spots for this Roth IRA conversion, let's actually give an example here. So the example I want to present to you is a single person making $40,000 per year of just gross income. Okay, so it's nasty, it's gross. No, I'm just kidding. It's funny that we call it gross income, but it has nothing to do with that. So they're making $40,000 per year of income, and they happen to put $10,000 into their 401k at work, and this happens to be a traditional 401k. So that means that that $10,000 that they put in there does not get included in their taxable income. Instead of $40,000 of taxable income, they actually only have $30,000 of taxable income. However, they also get to take what's known as the standard deduction, and for 2022, the standard deduction is $12,950. So this is basically the initial minimum amount of money that you don't have to pay pay taxes on. We can subtract that $30,000 after they put the 401k in there, and they subtract that standard deduction of $12,950 for the 2022 tax year, and we have an actual taxable income of $17,050. So this is how much of their income is actually going to be taxed, is actually going to get plugged into those marginal tax brackets. And of course, this is an oversimplified example. There might be some other factors to consider. They might have other deductions, they might have other adjustments to their income, they might actually even qualify for some other tax credits. But for just simplicity here, let's just say they're going to get taxed on $17,000 of taxable income. Now, in order to find their Roth IRA conversion sweet spot, we need to look at the top of the 12% tax bracket. So if we go to the single person and we go down to 12%, what is the top of that single tax bracket? Whatever that number is, we subtract that top number from our taxable income. And that amount, that difference, is the amount that we can convert from our traditional to our Roth and still stay within the 12% tax bracket. So yes, we're going to pay some taxes on that converted amount, but it's going to be only in the 12% tax bracket. But that amount can grow substantially more once it's in the Roth IRA, so it might be worth our while to do so. And that's really how it works with those Roth IRA conversion sweet spots. You want to find out how much you can convert while still staying within the sweet spots of the marginal tax brackets. And I actually did this myself last year. I waited until December of 2021, the beginning of December, and I had a really good estimate of what my total income was going to be. So I converted a little bit of money from my traditional IRA into my Roth IRA. But what I was really thankful for was it was super easy to do this Roth IRA conversion, okay? I made sure that I calculated it out and I stayed within the 12% tax bracket. And thankfully for me, I used M1 Finance and they took care of everything for me. So all I had to do was go onto the website, fill out a little form. I said, hey, convert this amount of shares from my traditional IRA into my Roth IRA. And within a week, it was already done. I didn't have to do anything else besides that. And then I got my tax form and now I know exactly how much was converted based on how many shares were converted at that time. I stayed within that sweet spot and M1 Finance took care of all of it for me. And that's why I partnered up with M1 Finance. The reason why is because I actually used them myself. I put the vast majority of my net worth into M1 Finance, and that's why I stand behind their platforms. So even if I wasn't an affiliate of theirs, I would definitely recommend them. If you go to oncashflow.com/resources, you can see on there I have M1 Finance. You can see some of the biggest reasons why I chose them. And also, if you click through that link and you go to their website, you can see that they probably have a bonus going because they always have bonus goings for new members to contribute a certain amount of money into a new account, and you can get a cash bonus for that as well. Thank you so much for watching this video. I'm Zach from oncashflow.com, and I hope to see you next time.